Mike and Tom are registered with Steward Partners Global Advisors. Common Sense Finance with Mike Wiginton and Tom Farrell of HL Wiginton Capital Management, an independent investment and financial planning firm in downtown Jasper. Mike is a chartered financial analyst charter holder, and Tom is a certified financial planner professional. They are here to discuss and give their thoughts on current financial and economic matters. Now, with Common Sense Finance, here are Mike and Tom.
Hello everybody and welcome back to another edition of Common Sense Finance. This is Tom Farrell, I'm Mike Wiginton, and Oliver Stone is going to roll the title of today's podcast across the bottom of the screen so that when you see it, you'll kind of understand more where we're coming from, because the title is wAIt. And as you see as it scrolls across, this has something to do with artificial intelligence and some of the shenanigans, you might say. I don't know if that's the word you'd use in terms of some what's going on in the market. And so with that, why don't you take it away?
Yeah, we were looking at some numbers, and today is, the 18th, July 18th?
Mm-hmm.
So we're looking back at the first half of the year, looking at some numbers in the market, and, the returns are really skewed if you look at this, and I'll kind of go into what we're talking about, but everybody, I'm sure, has read or heard about, what's going on with artificial intelligence, how a lot of companies, have really, their stock price anyway, has really exploded in the last, 6 months to a year. And that's really affected the overall market, but it's not really what it seems. So just a couple of numbers here to run through. The Magnificent Seven, so that's going to be Amazon, Tesla, Nvidia, Microsoft, Apple, Google, and Meta, formerly Facebook. We'll look at the first half of the year. So those 7 stocks are responsible for 60% of the returns in the S&P 500 for the first half of 24. The average stock in the S&P 500 is up 4.1%, while the overall index is up 14.5%, driven by those 7 stocks. So that's why you're getting the skewed return. So not all stocks are participating in I guess the rally, if you will, of the first half. So it's kind of skewed a little bit. So if you look at the equal weight S&P 500, so it takes out it makes all returns of every stock equal, where the actual index is cap weighted. But so if you look at the equal weighted, it's up for the first half of the year. This is price moving only about 3.2%. Whereas the overall return is 14.5% price movement only. So.
And there's an equal weighted exchange traded fund that one could own if, obviously they would be suffering from a performance standpoint. But that is an investable option for an equal weighted
right.
S&P 500.
Yeah. And if you want to own all of them equally and you don't want it to be skewed by a handful, that's certainly something you can do. So now looking at the second quarter of 24, 6 of the 11 S&P 500 sectors were actually negative.
In the second quarter.
In the second quarter, while the AI-related stocks were up 14.7%. So, again, a big disparity in returns between a handful of stocks that have driven the overall indices up and basically everything else.
Yeah, and so one of the things that I think is important for investors to understand is we refer to that, and always have, is the breadth of the market and how there is none, that all the return is here and everybody else, they're not suffering. I mean, they're up, but nothing close to what as you've said, to what the overall market or the so-called magnificent 7. But my point is, when you have no breadth in the market, that's not a healthy sign.
Right.
Okay, and that's something that we've talked about and watched. And continue to do so for really most of this year. So again, I just think you're enjoying your returns, obviously as we are too. but we do it with a really, really cautious eye, if that makes sense.
Yeah, because when the trend turns, and it will eventually, that's those 7 stocks are probably going to not fare as well. But we'll see. But we've already seen, like I said earlier, today's July the 18th, the last 4, 5, 6 trading days where those stocks have really taken a beating. When I say a beating, they're off, maybe 5, 6, 7%, while other areas of the market are starting to make a nice improvement. So small cap is up, I don't know, in the last week it's probably up 4.5%, 5%, and we're looking at the Russell 2000 to measure that. And other areas of the market like the Dow Jones Industrial Average is up where it had been lagging. So we may be in the beginning of seeing, a change in what's been going on. So we'll keep an eye on that.
All right. That's good. Anything else? All right. We'll see you next time.
You get high. Does your daddy cry? Controversy. Controversy. Do I believe God? Or do I believe me? Some people wanna die so they can be free. So life is just a game. We're all just the same. Controversy. Controversy. Controversy.